Welcome to Forex Films. Today is Tuesday, June the 14th, 2011, and we have a lot to talk about today, mostly just because of building anticipation of rising risk. And right here we have the Euro US dollar, and this is the downtrend that it has been in since early June, and we came up here and we're testing resistance at 147 so that we could either break to new highs or start a third wave lower. And we came down pretty hard. The only thing I want to say here is it's not possible to really count a 5-wave impulse down, such as a lot of people want to, where they want to count the 1-2-1-2 pattern, unless you have a failed fifth here and you allow this second wave to go beyond the origin of wave 1, which is possible due to high leverage, but you're really stretching your counts whenever you make that happen, and it drastically lowers the probability of any count that you count that way. So really what we have here is a 3-wave pattern, and I'm counting this as A, B, C of an A, then B, and then a 5-wave movement down in C. We had a lot of base building, and then we've started accelerating higher, and buying on dips. And it looks like this dip would be very good to be bought probably in 44.50s. And I will continue doing that. Really, I've been buying Australian dollars too, but I stopped adding to my Australian dollar position to purchase more euros. I'm using most of my margin to purchase euros just due to the fact I think it's got more continuation, and when it really does move higher, it's going to move higher more quickly than any other currency. But starting off, definitely there's other currencies such as the British pound and Australian dollar that start moving more quickly than it does, just because so much is holding it down. The sovereign debt crisis, Greece, Ireland, Portugal all have record high rates, which is very bearish for those three economies. All three have been bailed out. Greece is looking for a second bailout and probably going to see some restructuring. But I've put this fib count up here just so we can play devil's advocate here and see what a good retracement would be. We've already passed the 382. This is a good place for a retracement to end. But if we don't see good acceleration to the downside, it's just not going to happen. So I'm really looking higher in this. If we break 145.50, it's really a sign that we're most likely going to 1.54 to 1.55. And if we break 1.4750 zone, then it's definitely on. So let's move over to some other pairs. One last thing before I do that though. When you see the euro start to move higher, a lot of times it moves higher against other currencies besides the US dollar too, and in this case it hasn't started moving higher against the Australian dollar yet, but the euro British pound has started moving higher along with the euro US dollar, which is a huge sign that the euro is turning around and it will be the better long currency until the bull trend is finally over. Alright, so Australian US dollar. We've had a huge surge upward. I hope you got in down here where we'd been anticipating that it would turn around. And this is actually a lot easier to count as a 5-wave movement down, even though it's not nearly as impressive as this movement up, either in momentum or magnitude. But we've retraced that all the way to the 76.4% retracement, and we've just bursted through tons of resistance really to do this. If we really compare this move to any other move, it would be this move back here. And that shows us that we're probably headed higher in a third wave. This was previously counted, if you look at my Elliott wave analysis, as wave 1, wave A, B, and then C. And now we're headed higher. This is a 4-hour chart, by the way. So it looks like we're really headed to my soft target being 112. That could change as things go along, but I would say at least 112 is what we're targeting. In the meantime, this is offering excellent rollover, especially tomorrow, triple rollover day. So we should maintain a position in the Aussie, definitely. I'm probably going to hold it until my final target, or we see a turnaround that I do not expect right at this moment. So my third major position, I keep trading the dollar CAD because I know it moves sharply back and forth, and eventually we're going to have that super sharp move downward. And we did very well today. We finally made what looks like we're going to have a true break of this channel here. I really expected it to the downside for several reasons, just because I'm a dollar bear right now until we get one more high, and because of the corrective pattern that we can see if we look at this on the daily. See, this looks super bearish on the daily, just like on the Aussie US dollar. We had kind of like a triangle pattern here, and we finally turned around and are breaking much lower. We had really good Canadian news come out this morning, by the way, which definitely helped this. Capacity utilization for Canada was much higher than previously and much higher than it was expected to be. So we can look for a good continuation on this. This could be the sharp move down, and it will probably take us at least to 92.50. So keep your eye on this. Dollar Swiss. We had this sharp move down, which the Swiss franc really led the currencies higher against the US dollar. But then it retraced very deeply, and this offered a very low risk, good opportunity. But I didn't take it because I think the downside is really limited. I think we'll probably find support around 0.82, and I think the downside is fully limited to 0.8140, because at that point, if it goes beyond that, then my current Elliott wave count is incorrect, because wave 3 in that case would be the shortest wave in the pattern, and that would lead to even more dollar Swiss losses. But everything is shaping up how I've expected it so far, so I'm still thinking downside will be limited. We don't have much more to go. Use your margin to trade other currencies, but I think this will be a huge opportunity once it finally turns around. So, pound dollar. If you've been watching my website, I'm not sure if I mentioned this in videos or not, but this pattern right here offered great opportunity for a wave C equals wave A trade. And it was very profitable, but once we're in bull mode again, I want to be trading Australian dollars and euros again because, one, the British pound takes more margin to hold, and two, I think they're going to be moving more than the British pound just because it's been muted for really years now. Since about 2009, it hasn't moved as much as some other currency pairs, even though in like the last month, Australian US dollar hasn't really gone anywhere either, but like the yield on that. See, this is shaping up to be a pretty good correction, which will lead the euro pound most likely higher, because I don't think euro dollar is going to fall near as much in its correction as the British pound. We might come all the way down to 63.30 like I'm sitting at right here. And I also want to discuss New Zealand dollar. This is monthly candles because it shows all the data that I want to show here. This was the previous all-time high way back here. And as you can see, really, since we've surpassed that all-time high, we haven't been able to break very much lower. And that's really what I was trying to get across a few weeks ago when this broke, and I was talking about just holding this, and we're looking at probably continuation to the 85 level. Still think Australian US dollar is going to be the better trade. You get more yield, and it's probably going to have a greater magnitude of a move. But this is a fantastic trade if you think the Aussie US dollar is more risky. And really, that's it for the day. We've got a lot of great trades without going to crosses, so take advantage of them, and good luck trading. Thanks for watching.